Markets are anxiously waiting right now for when the Fed will finally pull the trigger on rate cuts. And history tells us when the Fed cuts, money moves fast. The question is though, which ASX stocks will be the biggest winners? Because there will be some big winners. In this week's show, our experts, trusted by Bloomberg, CNBC and Sky News, break down the 8 stocks you'll want on your radar before the Fed makes its move. We'll also give you a hot stock tip and cover a trending idea you cannot afford to miss. I'm Janine Cox, joined by Senior Analyst Philip Tortevsky and Blueberry Derivatives Broker Zoran Kresovic, and we are Wealth Within. Good evening.
Good evening.
How are we?
Good evening. Good,
very good. Yeah.
Good to have you here, both of you.
Yeah.
It's so exciting, isn't it? There's so much going on in the market, and there's a lot of posturing going on at the moment about which way the market's going to go.
Yeah, I mean, we're at a point now, September, obviously, where things will get, we'll know a lot more coming into that third, the fourth quarter. So the big rate cut or decision, a lot of stuff we're going to get into, so yeah.
And it's going to get really hot, so let's get straight into it. Are we likely to see a Fed rate cut next week? And what will that mean for our market moving forward? Zoran, I know you're all over this. What have you got for us tonight?
I think we will get an interest rate cut, and market is already priced that in a 100% chance that we'll get 25 basis points, especially after Friday's non-farm payroll data. I don't know if you guys have actually seen it, but job creation is kind of diminishing. Labor market is weakening in the US as well. And I think for the past month, there was only 22,000 jobs created, which was well under.
They wanted 70, didn't they?
75 was the estimate. And we also seen kind of unemployment ticking up as well to 4.3%. So the Fed has kind of made its decision, and it looks like we'll get 25 basis point cut. Now, there is a small chance we might get 50 jumbo cut, but that's only like 7 to 10% chance. So I'm not quite sure.
What could that do to our market then?
Well, I think that could obviously add more, bullishness, or sentiment could continue to head higher if that was to happen. But again, I'm probably a little bit more conservative on this one, and I think 25 is locked in, and that's what we will get.
But I mean, just before that, you had inflation creeping up in the US, and then you get this job number come out. And then obviously now a few months ago they weren't talking about a rate cut. Now they're saying there's a rate cut coming. And then you've got on top of that, the war between the Fed and Trump, where he tried to sack, what was that?
Jerome Powell.
Well, Jerome Powell was one, but then the courts ordered that you can't do that. But there was another lady, Cook, I believe her name was, she was on the board of the Fed. He tried to get rid of her to make it a bit easier to get his way, basically. So it's like, I don't think that situation is that stable. Yes, maybe a rate cut coming definitely on those latest job numbers, but...
I think touching on that point, I think Trump actually tried to ignite or get rid of Jerome Powell primarily for the reasons that he actually I think he was actually right on this one. He wanted interest rate cuts to come earlier than... as opposed to wait and see scenario, Dopplering, what they like to call, to basically make assessment based on the inflation, unemployment and stuff. So they actually try to front run it. This hasn't been the case. And now basically they might start to play a bit of a catch up, which could push Fed to do that jumbo 50 basis point cut.
Well, look, I think that's anyone's guess right now. And they're really postulating a lot about which way it's going to go. But Zoran's saying 25 basis points. We hope you're right there. Now, let's have a deep dive into our first lot of ASX listed stocks that you need to know if the US cuts rates. Now, Phil, you've got a really interesting list tonight. You're going to share 4 with us straight away?
I am, yes. We're going to get through a couple right now, and later on there's even better ones coming up. So stay tuned all the way throughout this. Let's get to the first one now, which is Amcor. Now, a lot of these stocks that we've chosen, just so everyone knows, are stocks that have heavy US influence. So they will be affected by the rate decision coming out over there, which, let's just call it what it is. A rate cut should be on the card. So, I mean, if we do cut rates out in the US, you can see the lower rates will reduce Amcor's dollar-denominated borrowing costs and strengthen cash flows in its North American region, boosting earnings. Now, when you look at the chart, I think it's in a very, very interesting spot as well, Janine and Zoran, because I draw this level here at $13 or just thereabouts, and you can see, and I'll bring this up, widen it out, but $13 has been really the base for this stock since 2015. And even though we've had spikes, that's the important part to remember. We had the 2020 COVID spike down, but look how strong it reversed from that level. So I think $16, yes, we're through it right now, but I would wait and give this, a month or two to play out, because it has in the past closed or gone below for it to then reverse. So
now some people are saying that, they don't get why this stock is falling, because it tends to be more a defensive stock in these sort of climates. But it's falling away. But if you're a student, then you understand it from a pattern perspective on the chart. It's just shown that, it's right there in front of you. You can't miss it.
Yeah, and I mean, now you're touching on the biggest argument of them all. It's like we can sit down here and postulate what the US is going to do, what fundamentals say, but so what? If you do not follow price and actually see what is happening, then really it's the moves that are going to be telling you where the positions are being placed. And that to me is the most important thing, because you're trading price at the end of the day. But let's go back to the chart. And right now, we're at that interesting level. I mean, there's that talk about, do you catch a falling knife? Well, it's a very risky play right now on this monthly chart to be looking for a buy right now. But looking for that reversal, it's all about that confirmation, and that confirmation does come with time. So right now, we're not seeing any of that. But I think if this stock can hold up around $13 and start reversing, giving us a few tests like we saw in the past through here, basing out nicely, then I think we've got a really clean opportunity all the way up to this range top at around $17. From there, it's anyone's guess. We've got to play the safe card with this stock, given it's struggled through 17 for so long. So I think, even from 13 to 17, you've definitely got an opportunity of around 25%. So more of a short-term play, opportunity trade, and beneficial rates out in the US would potentially help this one over the next, quarter earning or what have you. So
now you've got another interesting one there on your list that looks poised.
Well, I don't want to steal all the limelight. I want to give Zoran a chance, if I may.
Oh, look, Zoran, you can handball it to Zoran. Zoran, would you like to do TCL?
Is the next stock, so Transurban Group, and we can see that this, contrary to the other stock that we just actually looked at, we can see that this particular stock is moving somewhat upwards. I'm looking at the monthly chart. It's got toll road operations in the US, and obviously lower rates would often drive investor demand for yield, pushing up valuations of such infrastructure assets. Long-term borrowing costs are also ease, which could potentially improve the profitability as well. But this one is actually very different to the stock. This one is very different to the stock that we actually looked at before. So it's actually going in a nice uptrend, and the low is back in October 2023. It's actually got a kind of a long-term uptrend at the moment. I think in terms of the actual resistance levels, I'd be probably looking at levels around $15. I think it's actually really solid. And if it can break these levels, then we could potentially test an all-time high, which could be around the $16.44, $16.50. Break above that would obviously give a lot more bullish reason for investors to actually jump on the bandwagon as well. In terms of the downside, if I was looking to that, then I'd be probably looking at these levels here, which is around $12. So it is within a range of $12 and $15. So right now, I think it's a bit of a wait scenario. If the rates go down, which I anticipate it would be, it will probably provide headwinds for this stock to actually continue head higher.
Great. Oh, I think there's a lot of investors will be interested in that one because the good dividend yields. GMG is another one, and I thought you two were going to fight over GMG because you were talking about it before the show. Is there someone who wants GMG more than the other?
That one.
Yeah, sure. Why not? Okay. Let's have a look at GMG. All right. Now, this one, I mean, when you're looking at the scenario, the falling US rates tend to lower the bond yields, making the high dividend bond proxy REITs like Goodman more compelling, while also reducing the financing costs. But I mean, this stock hasn't been hidden from the market like Transurban. That's why, to me, that previous one, Transurban, looks a bit more appealing because it's getting ready. It's just starting to break out after a really nice pattern. Whereas this one right now, it's had a huge run back in 2024. I think the best part of the move or the opportunity, if you're thinking more medium to long term, was back around these lows, August and November 23, where we're on a monthly chart, and it's given some real textbook setups that our students out there would know. But I mean, now that it's quite stretched, I like the pullback that it pulled back right into where the real strong buying started. You can see how sharp that buying was. It pulled back right there, almost exactly, and buys found their way again. So it is becoming a little more volatile. As long as it holds, for me, above or around this previous all-time high, that's the market telling me that, okay, it's finding a new base at a new high, and that's promising for longer-term growth. But right now, I think it's very possible for this one to kind of, move a little sideways and kind of get stuck while it finds its feet, maybe something like this, because you often find after big runs, stocks will settle down, and, we saw that big run through there as well back in 2019, and look at the pattern that came out after that. Sorry, my throat. But the pattern that came out was a bit of a steadier at higher prices rather than a full-blown crash. So,
and it's an easy stock to trade, really, isn't it?
Oh, right now and that's the thing with these bigger stocks. When you're on the monthly chart, it just adds a whole nother layer of ease to trade. So, look, when you go back to this one and see right now this momentum that it's supporting and moving toward, I think a break above this level here at 36 is a nice place to be looking for the next leg up.
And that's what a lot of traders don't realise, the importance of being able to analyse and trade a monthly chart. There's a hell of a lot less data on a monthly chart, and it's a really good place to learn, which is why Dale's put it together to show people how easy it is to do this. So this is probably the most important book that you're going to read in the next year, hopefully this week, because it's going to prepare you for the next major correction and protect your investments. We've had people come into the office and shake Dale's hand, thanking him for writing this book. It's all on the Australian market, the top 20 shares, so how to beat the managed funds by 20%. So make sure you grab your copy. There's another book there also. This book's actually free. You can get it online free, just pay the postage. But the second book is also really compelling, so watch out for that one as well. We've got another stock now, Zoran, if you would. It's ResMed, one of my favourites. It's in the healthcare. Well, it's in the healthcare space, but it's just such a bullish stock. It tends to accelerate, go on long runs. What do you think of it right now?
Yeah. Out of all four stocks that I've looked at, actually, this one is probably my favorite one, to be honest, and just looking at the chart. So ResMed operates significantly in the US with large US sales and distribution footprint. Lower US rates make it easier for patients and insurers to afford the ResMed sleep machines, boosting sales across America. So I think it's actually very reflected within the share price itself. Just based on the course, anyone that's done the course, you can actually have a look at this chart and see so many good opportunities and so much good analysis in there as well. And the fact that it's actually broken an all-time high back in, when was this? In August 2021, resonates with me that the recent pullback is probably just a consolidation before the stock actually continues to head high as well. So I really like this stock. I think it's, there's a whole heap of patterns here that are actually unfolding as well. It's a long-term uptrend stock. It's pulled back in 2023. Ever since it's created higher highs and higher lows. I can't really see any downside on it, at least in the short term, unless something fundamentally really does actually affect it. But in overall, it's a great stock.
So great for the long term, also good for short term trading?
Yeah, I would say so as well. I mean, the stock has actually consolidated, and ever since it's broken through an all-time high and came back to retest it, for me, that's a positive sign. And I actually like to see that within a stock because, there is a bit of profit taking on the board as well. But once the stock does actually consolidate and start creeping higher up, then I think it's a great opportunity for people that miss to actually get into the stock or top up on existing positions as well.
Fantastic. What a great start. That's our first 4 stocks done. But stay tuned. The next lot will be even better. That's after this next segment, so stick around. But for now, we're going to get into something really interesting, and it's time for our trending topic this week. Phil, what have you got for us?
Yeah, all right. So the big news coming out today is the future of Rupert Murdoch's media empire, which involves ASX-listed player News Corp, and that's been decided with the keys to the kingdom left to the eldest son, Lachlan, while the other 3 have been bought out now. I mean, guys, this is, obviously we're talking about one of the big media players in the world. Obviously there's Fox News, there's a whole bunch of others, and we're going to get into the chart of News Corp to see whether there's an opportunity. But I find, and it's all over media right now, when you're looking at a scenario like this, big company, there's that cloud of uncertainty. It's when it's time for the boss to hand over the reins, there's always that question mark, how do things play out moving forward? Like Warren Buffett had to deal with that recently. We're still yet to find out. But we know now how it's going to go. I mean,
it's so important, isn't it, for listed companies? For families, it's important to do that estate planning and have things in trusts and manage the future. But when it comes to a media mogul like Rupert Murdoch, I mean, they fought in the courts, and the children, did they lose? I mean, they got $1 billion each. I mean, is that
what they got? I actually didn't read into $1 billion each.
Yeah,
1.5 billion. But I think
he's worth 21 billion or something like that.
It's a bit skimp. Only 1.5. I'd be upset. But the big thing about it was that I think the older son's views of the way were much more in line with dads versus some of the other kids. So I think it's the company is going to be going down that same path that it has been in terms of stability. But if we look at the share price, this is where things get interesting for me, because we're on this momentum line here right now. Obviously, you can see since February 25, price action does resemble a bit of indecision. And when you overhang, the stuff that's been going on, it's failed the all-time high from February 2025. It tried to get through in August, but it didn't really capitulate. I mean, it really held, even through all that time. You can say it found a base at around that $51. Now we're testing this momentum line that it's been supporting. Yes, we're falling right now, but I think if we can start to reverse and take out September's high, we've got a good chance of getting through that all-time high. And if things have cleared up, which it seems like the first step is done, it could turn back into a nice trending stock with longer appreciation, because there is, you can see by the price action, this company has been able to show good price appreciation ever since 2020, right?
Really well.
What about those two tops, though, in technical analysis and what they indicate?
Yeah, that's the part for me where, and that's why I've got it marked. That's the, I guess, area of concern right now, because if we reverse now on the back of this news and the market takes it quite positively, then I think that's the next obvious level we're going to test again. So what it comes down to as a trader, long-term investor, you've got to ask yourself, is there enough opportunity for me to buy today and accept the risk that it might just go up, a couple of percent before it then gets stuck or reverses, only 9%. Is that enough for me? If you're a short-term trader, the answer might be very different. So that's something for you to weigh up. But
I guess that's the power of those trend lines, isn't it? They're so incredibly efficient in managing the trend and allowing you to be in it, even though there's a bit of volatility. It could turn around and just rocket off again, and the trend line's there supporting it, but also giving you an out, which is why Dale's book is so important to understand how that works.
Well, it's a plan. You're following momentum, the real momentum of what is happening, not, again, going out into other avenues and asking the what ifs. You're following what is really happening. And then from there, like you said, at the end of the day, all you need to do is line that up with a risk-reward scenario. Does it make sense? Does it not make sense? That's all you can do.
Yeah, exactly. Yeah. And just let it play out, like you say.
For me, it's still bullish as well. It's hugging the trend. It hasn't broken through that momentum line. So, I'm going based on the factual information. And as long as it can actually hold around these levels or move in a sideways range to consolidate, and if you can find some ground and continue to head higher to test those all-time highs, then it could be a good buy trigger in there.
Think about it. Interest rate cut, resolution to their whole family affair, which is what the market's been waiting for, potentially higher prices, doesn't it?
Yes.
All right. Well, that was so interesting. Thank you very much for bringing that to us, Phil. Now, if you want the skills to analyse stocks just like you've seen tonight, visit our website. It's wealthwithin.com.au. But now let's get back to our topic and uncover some more winners on a Fed US rate cut. Got to stick around for these ones. There's a couple I like in there. The first one I'm going to throw to you, Zoran, which is a really interesting stock, and I'm sure it's one that you've traded over time. Aristocrat Leisure.
Yes, Aristocrat Leisure, ALL. Another good stock that's actually looking quite healthy. I really like the weekly chart as well on the right. Cheaper borrowing and better consumer confidence in the US means casinos buy more machines and Americans spend more on gaming. And recent commentary showed that the North American gaming operations and gaming scaling has strong growth. So I think it's very like economics 101, right? Like lot more disposable income, less pressure on the housing as well. If the rates go down, then gives...
Slap it all in the pokies.
Yeah. Well, for some people they enjoy it. I certainly don't, but some do. Then there's more for gaming and leisure, right? And some of these companies actually profit from that. So on the monthly chart, I like it. I think it's actually done a long-term uptrend run, came back to retrace. I believe this is April lows, and now it's actually climbing back up nicely. Weekly is also looking really good as well at the moment. In fact, actually, weekly is showing a little bit more noise, but I'm a big fan of it right now. I think it's still within the actual trend. It's still holding well, even though it's actually this week it looks like it's going down. But if you do get the interest rate cut, then hopefully it can actually reverse and close higher than or above the actual uptrend line. So I think this stock has got a fair bit of upside at the moment as well. All-time high is not too far off as well, which is sitting at $79.95. So if we can continue head high and test the all-time high, it could be fairly bullish. The only thing that I would like to say on this particular stock is that I'm getting a little bit concerned, or the only red sign or red flag should be the volume is actually coming off whilst the price is actually rising. So it could be pointing out there might be an exhaustion coming through at the moment, but one to watch definitely.
Well, I guess that's the timing with the market. So it's interesting to watch some stocks as they pull back when the market pulls back, and just to see whether it comes back to the same sort of degree. Is it less? Is it more? Just to know whether the bulls are still in there picking up those pullbacks and buying at those times and seeing that as an opportunity.
Absolutely. But September is seasonality. If looking at the seasonality aspects, September is not the best month on record anyway, because we have the reporting season. Now is the ex-dividend time as well. And ASX is one of those share markets where, we are high dividend paying market as well. So a lot of actually investors are focusing on value as well, which, in the interim actually, provides the opportunity to basically look for those value stocks as well. And a lot of people are sitting on the sidelines at the moment as well until stocks get, dividend adjusted.
Well, look, another one I know that you'll both like is WiseTech. Phil, a tech stock. The tech stocks have been on the nose a bit. They've been pulling back.
Yeah.
Does that spell opportunity or just stay clear?
Well, look, let's go and take a look, right? Because, yes, you're right, Janine. Now, even out in the US, the tech stocks have had a bit of a pullback. But you asked the question, where have they come from? Well, they've been some of the best performers over the last couple of years, especially the ones out of the US. I won't even mention their names. But, for me, and I'll just start it off, obviously, we've got this... what happened through here, February, with WiseTech was some news that came out regarding some of the things that happened within the company. I won't get into that too much, but it seems to have recovered quite nicely. Yes, it's dipped down recently, but for WiseTech, they recently acquired, and this is where it gets exciting for the US stuff, because they acquired US-listed logistics software company E2Open for about $4.6 billion, signalling deep US market integration. The easier US lending conditions and stronger business sentiment can drive the adoption of WiseTech's logistics platform among American firms. So they're pushing into the US. That's a big thing for them. Expanding, which is, for an Aussie company, it's nice to see, trading at all-time highs. The way it reversed following that real pullback, and that was based on the CEO and things, but again, I don't want to get into that too much. You can read up on it yourself. But purely technical, all it's done is come back to the line of momentum. And this is the thing that I think is important to show people, that despite all of the stuff that happened from a fundamental perspective, you ask yourself the question, so what, and where's it likely to reverse? Well, if all you did was draw one of these trend lines that we do teach, it's reversed exactly on that. So it gives you that heads up to know, all right, where are things likely to happen and what comes next? Now, the fact that we've consolidated, bounced up strongly, basically into where that selling was, and there's a gap there on the weekly, now the sellers have had their chance. This, right now, is the critical moment for me, because this shows how strong those buyers were. If the sellers move on down and take out that level through there, then that tells me this was just one of those if you will, speculation type rallies, or people trying to pick up the dip for short-term speculation. Now, if the sellers come through and they manage to hold, which it seems like there's a bit of buying coming through there, they hold where the buying started through this level here, then to me that tells that the story, these buyers are serious and they've got more upside in them. So WiseTech is in that interesting spot right now where you're going to know a lot more in the next month or two. So if it starts reversing from here, then I'd expect a run up to 120 easy, if not the run back up to 140. And that is, after the bad news, to recover like that, that's promising. So I think this one's definitely one to watch very closely, because what comes next could be the real opportunity.
I can't tell you the number of times, even on shorter term trading, that people have come back to me and said, you know, just if I had just had that trend line underneath the rise, then I still would have been in the stock. And that happens a lot, doesn't it? So,
yeah,
you know, it's such a valuable tool that you're demonstrating there.
But even timeframes, like, you know, a reason why a lot of short-term stuff gets, you know, you get those emails, like you said, or those calls, is because, you know, the more you dive into the market, the more you're getting involved in the noise of that market, where, you know, we're showing you charts here that are eliminating all that, giving you the real significant strong price action happening, which is why it makes things a lot easier, and why these techniques are showing to, you know, represent a lot more. But yeah,
they're amazing. I mean, I just think back to before I got involved in the stock market, how absolutely blind I was to what goes on. So it's an incredible journey. Make sure that you're on it and talk to some of our education consultants. If you're thinking about it, even if you're just thinking about it, you know, it's just a conversation and it could lead somewhere fantastic for you. So the next stock we've got is CCP. Is that Credit Corp?
Credit Corp, yes. So CCP, another stock that's got a lot of US exposure as well. It earns a meaningful portion of its profits from US debt recovery operations. US earnings were recently highlighted for strong performance. When US rates fall, households and businesses tend to pay down debt more easily, improving collection rates and profitability for Credit Corp as well. Solid stock, if you ask me, because I feel like while the stock is actually come down quite significantly, it's actually found some sort of a bottom here, which is really good as well. So, you know, that $13.50 seems to provide quite a bit of support, at least in the short interim, which is really good. And more importantly, the stock is actually starting to head higher now. So having a look at the high of $18.48 in the month of August, I think it's just broken through the prior high, which is in December 2024, which is generally a positive, meaningful move. However, I would like to see the actual monthly close above these levels to actually provide me with a little bit more clarity and entry level as well. But nevertheless, the stock is looking solid. I think if it breaks clearly above $18.50, then it should be able to provide a good entry and buy signal at the moment as well. Anything below $13.50, it would provide a lot more concern, and we're likely to test the lows back in 2020, which was around $6 mark as well.
Now, I run a traders online forum once a month for the advanced students and past students, and I can tell you these sorts of stocks with this sort of volatility, that's what people are looking for to generate income from the market and do that shorter to medium term trading. So I think they'll be excited to see that one.
Yeah.
Interesting. Did you have anything else to say about Credit Corp?
Me?
Or would you like to move on to the next one? I know that you're excited about the next one.
Yeah, let's go. Let's go to the
Another tech stock. Yeah. Xero. Everybody's interested in this one.
Xero.
I'm getting all the tech stocks. All right. Well, yeah, another one that is experiencing a bit of a pullback, like Janine rightfully said, most of the tech players. But I mean, the thing with Xero as well is that it's been rapidly expanding in the US, acquiring that fintech firm Melio, a US payments platform, in 2025 for US $2.5 billion. Now, this deal is expected to lift the US revenue to 17% of their total sales. That's no small feat. The lower rates mean smaller businesses have more cash to subscribe to Xero's accounting software and no doubt the integrated payments, so more free cash flow allowing this kind of stuff. But to me, for Xero, purely technically, where it gets very interesting right now is this level here.
Yeah, I agree.
157. Again, we're talking about previous all-time highs, and you can see throughout history, the reason I'm saying it is because it gives you a real clue, previous all-time high here. If the markets hold above previous all-time highs, what does that tell you about what the belief is about, you know?
Yep, we've got it We've been saying
cutting me
it
off.
so long.
You're cutting me
I'm
off.
cutting you off because I'm so
Yes.
excited about it as well. We've got the biggest bull run coming, and that's really what Phil's trying to say, but I just went to it quicker.
Yeah, you've jumped the gun. I just saw what. That's all right. Can we just go back
I
to
actually
the chart?
thought you said something wrong and you didn't want to interrupt.
Nah, it's all good.
Saying all great stuff.
I got you excited. Is
That's
that
right.
what's going on? All right, cool. I've just marked a few more levels in terms of breaking through that previous all-time high. But you can see each time it comes back to test it, it's what comes next, which is the I guess indication of whether buyers are willing to accept a new base for this stock. Right now, we've had 2 touches, 2 attempts. So that's the part that makes it quite exciting for Xero in terms of, and look at that, another momentum line, touched it exactly. Buyers are coming in September, mind you, which is traditionally not a great month. So as long as we hold 160 or 156, I think longer term, it bodes well for this stock. Even so, shorter to medium term, I think it's always wise to trade with expecting the least likely scenario rather than saying, because how often do you see this? I mean, Janine and Zoran, you look at a stock that someone thinks, oh, I'm going to buy it at 160 and my target's $300, or I'm going to buy it as it falls back near these all-time lows and I'm going to expect the all-time high is my target. And yeah, it might get there in time, but a lot don't. And then you ruin your strategy because you're waiting for something to happen and you're not seeing the red flags flashing as it's going up saying, hey, it's about to reverse, it's done. That's all there is. So that's why with this stock, when you go to where it is right now, expecting a move to 190 is your safest play.
Yeah. I think it's really interesting what you're talking about, because when some of the students or clients come to us and then they want to learn to trade, some of them may have been trading for a long time and think that they know stuff, but we absolutely turn their heads and get them to see things from a completely different angle. And I think some of the things that you're talking about there are just classic, because looking at that and the fact that it's gone to a new all-time high and then pulled back on that, and you've identified all of those previous points where it did the same thing. It's about repeating patterns. How many people look at monthly charts? Very few, unless they're told or have seen our show and we talk about it. Most other people don't talk about this sort of stuff, and it's so critical. I mean, you look at WiseTech and Xero, both of them are doing similar sorts of things. And the big funds are doing sector plays. Look what happened to the healthcare sector. Yeah. It's a sector play. Same as what's going to happen with the tech sector when things take off in the US, then we're going to see a follow on from here. But, because you've got your rules, what's your attitude to Xero if it goes the other way?
I'm glad you just mentioned that, because we didn't speak about that. And that's the beautiful part. If we go back to that chart, it's very simple. There's a very obvious defined trend, which is being supported by this line all the way up. Once it starts to break below here, and then you start to see that relationship between the buyers and sellers change from, less strength on the buy side, more strength on the sell side, well, then that's the indication that, all right, once it gets below 147, now you need to reassess and wait for the next opportunity.
But the stock hasn't actually closed below those levels. It hasn't closed below the momentum line. So to me, that's not a concern at all at the moment. But if it was,
yes.
Like, I'm not arguing your point. I'm just saying, like, based on the chart.
On, argue.
No, I'm not, because I agree. I agree with everything that is said, but I'm just looking at the stock and I'm like, well, for me, it's not a red sign. Yeah, yes, it's fallen through over the last couple of months, 3 months or so, but it's still maybe just a short-term pullback before it continues to head higher.
Great
if
point.
it does break below that uptrend line, then I'll be concerned.
Let the man speak.
Yeah, what's that? What's funny?
I just said, isn't that what I said? But no, I'm joking.
Well, he's just reaffirming what you said.
Yeah.
There was something. Look, you're never going to agree completely on everything, are you? And
No, but a lot of people would sell here. That's my point. I should actually point this. So just because it's gone down for 3 monthly bars or 12 weeks in total, many investors and traders would actually sell this because they would get concerned or scared that it's going to continue to head lower. But like, you got to go week by week, month by month, and you got to follow your plan. That's the point that I'm actually trying to say.
Well, it depends if you're trading on the weekly or the monthly chart, doesn't it?
Correct.
Yeah. Good point. Thank you. Now, before we go on to the next exciting topic, we need to look at who likes WiseTech, who likes Xero.
Oh, is that the only two choices we have?
I narrowed it down for you.
Oh,
I'll go zero.
I was going to say Transurban, but all right.
Okay, so Transurban's your favourite, is it?
Yeah, I'll go zero just to be different.
You'll go zero just to be different because you do like these tech stocks, don't you?
I do. Well, going through all the stocks that we actually looked at that got exposure in the US, I think there's only two stocks that are actually downtrending at the moment.
Okay, good point.
That's a great point.
Which tells you one thing, right? The momentum is bullish and there is probably a lot more upside as well to continue.
Can you do the Trump dance?
No, not. It's an adult. It's not an adults only show, so we're not going to go there. Moving on, shortly we have some big news coming out of one of Australia's largest banks, which could reshape the whole landscape moving forward and have drastic effects on their share price. But first, let's answer your questions. So I've got an email from Jake who writes, I'm looking to buy into DMP. So can you look at the chart to identify a good place to enter? Everybody wants to know that, don't they?
Yeah, I mean,
question.
I don't know if we can really, talk about exact buying and selling points. That's not what it's about. But I mean, did you want me to?
Well, some tips for someone wanting an education?
Yeah, that would be the first thing. I mean, that's what you're trying to answer at the end of the day. An email like that, really, that's the crux of it, right? Because you want to, when you get to the market, you want to answer two things. When am I getting in and when am I getting out, really? And so being able to do that, that's going to alleviate a lot of the what ifs in your trading. But anyway, let's have a look at that chart for you and see what we can see. But, I mean, Domino's when, I think this is a question of, you got to really ask yourself, why am I looking at this stock? And if your answer is, I am one of these, I've seen something in the market that no one else has seen in terms of the market has it wrong from a fundamental point of view, then you really need to write your white paper and thesis and your PhD on why that is, because right now the market is not agreeing with any buying opportunity on this stock. What you will see before anything changes in the media is the technicals start to turn. And so you need to watch that chart closely for any signs of a reversal, of confirmation, all the things we talk about, because right now you're looking at a falling knife, unfortunately. And so I would say to you, for advice, look at the monthly chart, forget about everything else, go big picture, look here and try to identify where that level is that this stock's likely to reverse. Second, let it reverse. Don't be the first person here, because if you thought August was the low, you're wrong. If you thought June was the low, you're wrong. If you thought November was the low, you're wrong. And so, applying some techniques, waiting for the real confirmation, and this is about to reverse, that's what you need to do. And so I would be, see some more green on the chart first before you start looking at this.
I mean, it's a bit of an initiation, isn't it? If you get into a stock like this and it just keeps falling and you want to be right and all of that, and then you've got to accept that it's the psychology that's at play, that 80-20 rule again. And, it's a hard lesson to learn, but I guess...
Sometimes needed, though.
Yeah, look, I've worked with some guys who they just over and over again repeat the same mistake until they think they're going through the course and they're learning the rules, and then they start to apply it and they say, why didn't I just follow the rules and do what you've been teaching me?
That's all.
And then eventually the penny drops.
Yeah, and I don't. You got to kind of get where people come from as well, because it's been ingrained. If you're not in the stock market, what's the first thing you see from everywhere else?
Well, they want to look for cheap.
That's right. So it's you have to at some point go, okay, well that's the thing we've been sold is the buy low, sell high. But how do you do that correctly? It's not just buy stocks in free fall.
Yeah.
And that's why a lot of people that come to us have that mindset and think, okay, well, this is kind of how I think it should be, where it's not really the case. And it's just a small tweak that you need.
Really good advice.
To your mindset and to how you do things.
So the best way that we can help you is probably that discussion rather than actually telling you when to buy, I think is the most important thing that we've helped you with here. So I hope that works, Jake. We've got another email. Richard's email is next. Could you please analyse IAG for me? I'm thinking of selling and I have a target estimate of $11.50. So it sounds like he's got a setup here. Zoran, do you want to take a look at this one?
This stock looks a lot better than Domino's, obviously. Let's start off on monthly chart. So 1150 is still actually quite quite a bit off from the current level. So you're looking at additional 25% premium from the current levels. Look, I will say well done on picking the stock because it is actually looking really good at the moment. It's breaking through an all-time high back in, when was this, in August 2019. It's actually done a nice retracement as well, and it looks like it's actually hovering and moving sideways at the moment around the $9 mark. So if we get a break above these levels, which is $9 on the dot, then we're probably likely to see this stock actually head higher. Now, I haven't done any price projections to actually complement and agree with you that it will go towards the $11.50 mark. But what I can say is that the momentum is looking very bullish, and obviously the uptrend has started from the lows back in 2022, which means that long-term and medium-term uptrend are both up. So that's obviously stacking the odds in your favor, and it's looking really good. Now, in terms of the actual downside, I'd be probably looking at these levels here. So $7.20. I don't know what your rules are, and again, at what point you entered. However, right now it's actually looking fairly solid. And I'd be looking at probably a weekly chart to see whether we can break above that $9 mark. But I think it's a good stock. I think you've done a great work with your analysis based on what you provided in an email. It's just a matter of following through on your plan, and then hopefully it can actually go towards these levels. Also, just one last thing I will say is putting targets in place is good, but just remember and take into account one thing. If the stock actually continues to head higher past $11.50 and it goes to $15 or $17, I want you to think through how would you feel if you exited the stock and stock continues to head higher as well.
Or reverse if it starts falling.
Or reverse, yes.
And make sure you've got a good set of rules. That's probably one of the most important things, isn't it?
Yeah.
Great advice.
I always prefer to exit the stock based on set of rules and backtesting, as opposed to the price projections where the next cluster might be, if that makes sense. It can complement it.
I think Dale would be so proud right now.
Would he?
Listening to that. Yep,
Okay.
definitely. Next, we have a letter that we received last week from someone who didn't leave their name. It was quite a long piece, but the crux of it was about Austral Resources. So Mr. Mystery, who said that we haven't looked at Austral Resources since early June, and what were our thoughts on the future of this company. Very sorry that we haven't looked at Austral for you since then, but thank you for writing into us, and make sure you leave a comment under the video to let us know who you are. So Austral.
Yeah, I wish I brought in the actual mail. It was addressed to me, so whoever you are, thank you. I mean, you could email next time if you want to make it easier, but it was quite interesting. I thought it was some kind of all weekend I was mulling.
Fan mail?
Well, I was mulling.
You were going to frame it, weren't you?
I was maybe it might be a check. Who knows? I was all weekend. I was sitting and my wife's thinking, I wonder what do you think that letter was? And all these thoughts went in my head. It was just an email question, which is all right, great. So
you still got it, mate.
Yeah.
Lucky it didn't have some lipstick marks on it. You might have been in trouble.
Well, I would have been sleeping here over the week. But anyway, let's, should we get into it? Austral. What do I think of it? I think it looks good. It's an 18-cent stock. So it's one of these, I guess, small cap players in the resource play. And I think when you're looking at a stock like this, and if I zoom it out, it's very evident, this stock is not immune, especially in the early days, from being one that is, this type of price action really resembles, to me, retail speculation. Like to zip up, zip down, zip up, zip down consistently, there's been something that hasn't been able to stick to get this one to turn into a growth company or a growth stock. And so right now what's different is you see the volatility has definitely changed. It's become a lot more settled in things, but that doesn't mean that the liquidity is higher. It kind of looks like it a little bit, but I still think that's the issue with this stock. If you are looking to get involved, really you have to hone in on the liquidity side of things. Can you transact? Is there enough? All that kind of stuff that we've spoken about so many times. But the fact that it's held around these 10-cent levels, or it's 5 cents, bounced off a few times, that's a really nice basing pattern. We're in trend. We're not falling away. We're moving up. I think if you're one of those, you want a bit of a speculate or to speculate a little. And to answer your question, I think we're going to run up to, if we can break out of this high and take out June 25, we're going to run up to this previous high, which is around 23, 24 cents. where it goes to from there, that's the big question, because that's been the barrier in recent history. So what would be ideal, again, is a move above there and see how it reacts on the flip side. But I think even a move from here to there, it does look like one of those compression type patterns that it's about to bust out of. So yeah, as long as liquidity holds and you know while you're trading it, you can get in and out, sure, why not?
I think that's really interesting. And also, it's a classic looking at a stock that's actually been trending up and down and really volatile, changing personality, but then sort of trawling along the bottom for a while. And we teach students how to recognise those changes so they can identify the best opportunities. And that's really key.
Yeah.
A lot of people don't know how to look for opportunities, so they're just looking for tips online, which you know, you don't get in first that way. And
it's often the stocks like that resembled in the early days, you know, highly liquid stocks, big spikes in price, you know, no support from the big end of town to give you that clean price action. So, no wonder it's hard. Yeah, it's an interesting one. All right, we have an email from Chris who writes, keen to hear your thoughts on Cochlear, COH is the code for a long-term SMSF trade. I'm currently analysing the stock for a potential trade and it seems to be setting up for another run. Wonderful, great stock. It's in the healthcare space at the moment, which has been sold down a bit, but Cochlear seems to be holding up nicely. Did you want to talk about this one, Zoran? Sure. Good stock. I think it's a good choice. I also think it's a great stock for self-managed super funds as well, especially if you're looking for more of a conservative approach and value and stocks that are providing good yields. So on monthly chart, it's looking really good as well. It's it hasn't actually, like the current levels haven't actually come back any lower, which is kind of a very positive. I think if you have a look at the lows of $246 back in June and May, it's actually done nice run up. As long as you can retrace around these levels and actually not head any lower, then hopefully you can actually break the levels of $320 on weekly chart, and break above those levels would most certainly give us enough legs to actually head higher towards the 350. I think that's kind of the interim and the target one that I'd be looking at on this particular stock. Conservatively, if it was actually to reverse and head lower, then I'd be probably looking at $270 level mark. That would be my first level of support, a little bit lower. And then anything lower than that, I'd be probably getting a little bit concerned because it could be around $250. The one thing that I'm actually noticing on this stock and specifically on weekly chart is that we can see a big sell-offs and long weekly bars. That's something to take into account when you're actually doing your analysis, and especially moving and doing the stop losses and stuff. Also, the same would actually apply when it reverses and heads higher as well. So it's pointing to me that it can get quite aggressive and it can move quite quickly as well. Now, obviously, you know, you're drawing a few lines on a chart, which is only maybe 1/50th of the analysis that you'd probably do on this stock before you decided to commit your funds. You know, if this thing goes into blue sky, then, you know, is the sky the limit for Cochlear, or do you think that it'll get stuck at the all-time high? Firstly, I'd like to see it go through towards that, as I mentioned previously, that all-time high with 350. And then if you break these levels, then breaking through an all-time high is generally considered as a bullish move anyway. What I would do in that instance is actually whole heap of price analysis and things that are taught within the course to actually do some projections and then follow through with the plan and see where it takes me. Fantastic. That discipline of having that process is so important. It's not just a trading plan that says here are your rules, but it's all the things that go into it before you actually get to the point of writing your trading plan, isn't it? Correct. Wonderful. Now, Paola's email is next. I'd like to hear your thoughts on SHL. That's Sonic. I bought it at 27.20 as it had triggered my rules and had found support at an important level in May 2024. I have a medium to long-term outlook on it. However, after the decent dip, it has triggered a stop loss, and I'm wondering if you see further downside or you see at these levels, since volume is coming in. Please don't be too hard on me because I know that I should stick to my rules,
but I must admit, since I finished the diploma, I've been doing so well that my ego is trying to take over now. Phil, do you want to answer that one?
Yeah, I mean, good to see that you're doing well, but I mean, you know,
To be honest as well,
Yes.
you know, that's really important.
it can happen. I mean, it can happen when you
Yeah.
you know have a whole bunch of winning trades. There is a thing called the winner effect.
And yours?
Yeah, I know. Yeah, I know from it happening. So let's go to the chart of Sonic and have a look for you. And I mean, all right, how do we answer this? To me, the question is, I'm not sure whether she bought in May 2024. If she did, I would say maybe that was potentially a little early. But right now, obviously, the fall that's happened, it's not normal market behavior, right? It's based on something. It released an announcement. If we go to the daily chart, the day it released, you can see how hard it fell. Now, it fell for a few days following, and it's even gapped even further. So what can happen a lot of the time on big news releases, on big volatility, these kind of moves, they can sometimes be flush outs. The market settles down, you know, and for it to happen so quick, I mean, if you're looking at weekly volatility being 5, 6, 7%, and then you get a move of weekly volatility being 3 times that amount, it can signal a you know, a flush out. Secondly, this stock was coming into one of these major corrections, and I'll go on the monthly chart here. And I mean, if you look at the history of Sonic, that's a 50% correction. You go throughout the whole history of Sonic, that's probably the biggest amount this stock falls when it does experience one of its big corrections. So you got, you know, there's 50 there or 46. You go through this period through here, which was GFC, 44, 45% during the GFC. So we're now up at that 50% correction, and it's not uncommon for a stock when it's at a major low potentially to do this kind of price action. Like, it's not always clean like you would see a stock that's already found a base and then breaking into trend where you get the nice moves. At the low, this can happen. I would be waiting for what the close in September to see, not to do anything with your trading rules, because you've got to make that decision whether you're going to sell now, and think about if you don't sell, things can get a hell of a lot worse.
Well, what about the fact that the trend has continued? You know, like the
Okay,
downtrend. This is a long-term downtrend that it's in. It hasn't just ticked below it by a bee's knee. It's actually fallen quite below it to continue that downtrend.
Yeah.
Now, it's also broken below that really strong support level that you just mentioned.
Yeah.
So there's got to be a line in the sand, and I think that's the important thing here, isn't it?
Yeah, there must, yes, especially because you've got a trade on. I mean, you've got money on the market now, so you've got to weigh up what option.
Stop loss.
Yes, a stop loss. Do you do the right thing in terms of your, because first and foremost, it's capital protection, right? Second, because to guess, now you're in the guessing game of, if I hold a little bit longer, you know, will it reverse? That's the question you're really asking.
But that's a hope.
That's right. And so, you know, you've got to make that decision. Do you eliminate that risk, cut it right now and move on to the next one? But
so can I ask a question?
Yep.
And anyone can answer this. Why do we hang on? Like, why do we want to hang on?
Because it's an emotional decision now.
But what could be behind that, though?
Well, it could be the reasoning what she mentioned previously. I mean, it could be the fact that she had 20 winning trades and now this is a first losing trade, and you can't accept the fact that you're wrong.
What happens to position sizes once you've started successful trading?
You go too hard.
Well, they can increase. I mean,
So it could be that the position sizes got to the point where it's like, you know, I don't want to crystallise the loss because it's a bigger position. So
correct.
Could it be that?
Absolutely, it could be that, 100%. But I mean, and also I think the difference here is that it's happened at a time where, you know, it's the news driven. It's based on something. So maybe in the mind she's thinking, as often can happen, all right, well, maybe the market's just overreacted, which can happen around this time period. So there's a lot of things going on. That's
just look at CSL, Sonic, Ramsey. All of them have been sold down.
Yeah, I can see the reasoning why she entered the trade. Like if I have a look at the chart, then you know, I'm not going to get into it too much. I can see the reason.
Yeah, so there's pluses there.
Yeah, I can see why the entry point was there, because, you know, there was a fair chance maybe it could have been the bottom. Just looking at the last major range, which is what I'm looking from an all-time high all the way to the current
but now
range.
It's about managing that exit.
Correct. It's managing the exit, and something unforeseen probably
Rip off
happened.
the Band-Aid.
That's right.
Yeah.
Yep.
Or That is the major low there in May 2024. So
Or you can go another $10 lower.
You could wait until the end of the month because it's just tested that major low in May.
You're just guessing now, aren't you, really? Now it's time for our hot stock for the week, and we've got Soren to present it to us. Soren, take it away.
Yeah, so the hot stock tip for today is NZ Limited. And before we get into the chart, the big news today is NZ are planning to slash more than 3,500 jobs by next September, which is a huge news.
Massive. Normally the market rubs the hands and says, all right. Is it good for the bottom line? We like them again.
Well, reporting season has loved it. All the cost cutting has worked well for all the retailers.
Yeah.
Didn't they leak the email to all the employees by accident?
I think something like that happened. Yeah, I read it this morning. I think the email went out and a lot of people were actually aware that something is happening.
But the new CEO is known for being hard-lined, and so I think not many are surprised.
Well, they released a letter saying, we care about our employees and this and that and the other. I mean...
As you always do.
But, it's got to be released to the market, doesn't it? I mean, that's the bottom line, all of this sort of stuff in a timely way.
But in saying that, I think market needs to adjust to this and get used to it because...
They're not first.
That's right. But with AI and everything coming out, it does look like there's going to be a lot of these jobs actually gone in the future as well. I know in my industry as well now, in the brokerage space, a lot of brokers are starting to involve and actually include AI systems, and a lot of operational roles and risk roles are actually getting culled and basically...
and that's where I say, if you're concerned about your job, this is the time. If you've been thinking about learning the market, you need to have another income stream to protect yourself. You just never know what could happen.
Yeah. But looking at the chart, NZ, looking at the banks overall, we all know that we have one of the most expensive banks in the world at the moment as well in terms of the valuation. But NZ in this particular instance on monthly chart is looking actually quite good. It's got a support around $30 mark, and if it does actually continue to head lower and towards these levels, that's not unforeseen, and that's something that I would actually expect if I was doing the analysis. However, looking at the upside itself, there is actually quite a bit of resistance at an all-time high level around $36.50. Now we all know that obviously Commonwealth Bank runs the show when it comes to the top 4 banks, and it's probably most expensive and most profitable bank out of all of them. But NZ could be the one that's actually a little bit undervalued and could be going towards those levels as well.
I'm excited about them from the point of view of they've taken over Suncorp, they're consolidating all of that, they're doing what they told the market they would do. Whether we like it or not, whether it's good for people or not, it's what they committed to. And who knows what we'll see. And look what happened. I was just going to look at the chart then, and then I realised that you're on me. But if you look at the chart now, you can see that the run-up prior to that high of the GFC, so back prior to if you go back on the chart for me, we can see prior to the peak of the GFC how ANZ unfolded. It has these really nice long runs. We haven't seen that yet on ANZ. So this is potentially the start of it.
Yeah, and sometimes you have to make these hard decisions, and that's why I get these people in such positions and pay them a lot of money to actually come in and make non-emotional decisions for the better of the business and long-term growth. So,
but what does that say for, well, I shouldn't say the ethical side, or maybe I should, but for the way things are going to go moving forward, in terms of jobs, in terms of all that stuff, is this the new way,
it goes in waves.
Profit?
Yeah, I think that's what's going to happen. I do. And that's where people need to wise up and get really focused on how they can protect themselves, because some people will lose their jobs. Now, if you want more from us, check out our video, Silver, Gold and Platinum exploding on the ASX right now.